Here are my top 5 basic tax strategies everyone should know about. Number 1, maxing out all available qualified accounts. When I Googled what is a qualified account, this was the first thing that popped up. Qualified investments are accounts that are most commonly known as retirement accounts, and they receive certain tax advantages when the money is deposited into the account. That definition works. I'd like to expand on and simplify it slightly. Any account you can put money into that provides a tax benefit from the government. So, are you taking advantage of all qualified accounts available to you? Here is a list of some of the most common qualified accounts. This is not an exhaustive list. What you need to find out, how many of these can you participate in? What is the max you can put into each? What is the tax benefit? What are the restrictions? A trusted financial advisor can help you sort through this if you know of anyone. Always good to make sure you are maxing out all available qualified accounts if you have the cash flow to do so. If not, work up to it. Number 2, bunching your deductions. Nearly everyone who files taxes receives what is called the standard deduction. If your personalized itemized deductions don't exceed this standard deduction amount, then you get to take it. If your personalized itemized deductions do, then you take them. You take the higher of the two. What if you have a very charitable heart, you are married, and you give $20,000 a year for which you get to take a tax deduction? You have no other deductions. You will, of course, receive the blessings of heaven for this, but you're not getting the benefit when you file your taxes because it's not exceeding the standard deduction. What if you could get the blessings of heaven and a larger tax deduction? But how? By bunching your deductions. Take the standard deduction one year, give or bunch all your deductions into the other. Standard deduction, bunch. Standard deduction, bunch. In my simple example, this would equate to an additional $14,100 of additional tax deduction every other year, assuming the standard deduction stayed the same. Number 3, utilizing a brokerage account for tax savings. A brokerage account is an investment account that is not qualified. You don't receive any tax benefits for putting money into it, but that doesn't mean you can't find tax savings with them. Here are a couple of examples. Tax loss harvesting. This means harvesting losses with stock positions that have lost value. You buy Tesla stock, it drops in value, you sell it to harvest or realize the losses. These losses can offset any capital gains you have in the future. To really take advantage of this strategy, you don't simply sell and move to cash. You sell and move to a similar stock or fund, maintaining exposure to the stock market growth while harvesting losses in the short term along the way. Using a margin account. A margin account is a way to borrow money against your brokerage account. Typically, you're allowed to borrow 50% of your account value. So, you have $1 million in a brokerage account, you can borrow roughly $500,000. Where's the tax savings? In 2 places. First, the interest you are charged for borrowing from yourself is tax deductible against income produced from your brokerage account. If your underlying investment growth exceeds the interest you are being charged, you are better off, especially if some of that interest is tax deductible. Second, instead of selling positions and realizing gains you have to pay taxes on, when you need money from your brokerage account, especially in the short term, you can consider borrowing it instead. This is a tax-free distribution. You need money for an alternative investment, basement renovation to eventually rent out, to float you during a job change, or while in between buying and selling a home. This is a way to pull money out and put money back in, all while avoiding any tax liability. Number 4, charitable giving. I've touched on giving already, but there are ways to get even more bang for your buck when you give. Here are 2. Giving with appreciated stock from a brokerage account. You buy Apple stock for $100. It grows to $200. If you sell it, you will pay tax on the gain. If you give it to a 501c3 organization, they get $200 and you don't have to pay taxes on the gain. And we call this a win-win-win. Secondly, 3 words: qualified charitable distributions, QCDs. I know this doesn't mean much to most of you, but I get really excited about QCDs. You should be excited too if you're over 70 years old. You can give directly from a retirement account to a 501c3 and avoid paying any tax when you do. If you're inclined to give, stop giving cash. Start giving stock or directly from a retirement account if over age 70, which can be subject to change. Number 5, making less money. This is not something I actually want you to do. I want you to make all the money in the world and remain kind, humble, and unaffected by it. Here's the reason I say this. Don't go buy a truck, a computer, or a whatchamacallit if you don't need it solely for the tax deduction. That is the equivalent of my wife telling me she made us money by buying her fancy clothes on sale. Also, no one ever needs a whatchamacallit other than to ask someone to prom. Also, don't invest in something solely for the tax deduction. I've seen people invest in opportunity zones, oil and gas leases, certain life insurance products, solely for the tax savings, without vetting the actual investment itself. On occasion, I've seen these types of investments not pan out, or be what someone expected, and yet, some don't seem to care because of the tax deduction they received. Again, buying fancy clothes on sale and thinking you made money. You didn't. Ironically, some go through extreme lengths to avoid any tax payments ever, at the expense of losing money in other ways by spending or investing poorly, or wasting valuable time, or even seeking to make less money. I've seen it. Don't do that. Wealthy people pay taxes, I promise. I work with some of the best wealthy people around. Humble brag. And there you have it, my top 5 basics tax strategies everyone should know about. Or at least 4 strategies and 1 principle to always and forever remember. Until next time. What if you have a very Sorry, I got all my notes in here. I'm getting confused by back and forth. Standard deduction, bunch. Standard, bunch. Standard, bunch. Standard, bunch. Tax deduction each year. No. Okay, that's for you. Transition, me. I don't know. Well, harvesting along the way.